Welcome to Pro News Weekly. Let's dive into the weekly updates on the financial markets. The dollar index rallied on the U.S. presidential election results, picking its way up after consolidation and correction in recent weeks. Technically, this could be the start of a rally into the area of last year's highs, creating a potential upside of 2 to 4% from current levels. In the longer term, a climb into the region of the 2022 highs cannot be ruled out. The markets widely discuss Trump's pro-inflationary policies, which will force the Fed to reconsider the pace of rate cuts next year. For now, this is out of the realm of speculation. We are more inclined to see higher tariffs, resulting deficit reduction, and manufacturing investment in the U.S. as potential reasons for a stronger U.S. currency over the next couple of years. A trio of key U.S. indices hit all-time highs on the rally following the announcement of the presidential election results. The Nasdaq 100 hit new highs for the first time in 84 trading sessions, while the S&P 500 and Dow Jones have not done so in less than 3 weeks. Historically, volatility tapers off after the election, with the November-January period providing the biggest gains for indices. Whether that will be the case this time around is a big question, as markets have already moved far ahead in valuations, and there are few details on how the White House policy in Washington will change. The transition of power from the Democratic to Republican parties in the U.S. has triggered a shakeup of portfolios, suggesting new leaders. In addition to expectations of acceleration in Tesla shares, investors also paid attention to Amazon, which went from a confident pro-democratic stance to a neutral one shortly before the election. Separately, it is worth mentioning the oil industry, with which the Republican Party is closely associated. ExxonMobil shares have added 6%, and Chevron shares have added 7% since the beginning of the month, about 3 times more than the price of oil has risen over the same time. Gold lost over 3% in value on the day the presidential election results were tallied. Cumulatively, from its peak in late October to its most recent low, the losses exceed 5%. So far, it doesn't look like a tragedy. Gold is just blowing off steam after more than 50% gains from the lows of last October. We attribute the price decline to the fact that a lot of capital parked in gold got involved in the game after the pre-election uncertainty. Technically, there is a test of an important support line at the 50-day moving average of $2,640. A failure below it will signal the start of a deeper correction to the 2,400 area. A sharp return to growth will allow us to talk about the imminent renewal of historical highs. The latter is a realistic but alternative scenario. It seems to us that now it is more likely that gold will leave the top role for a while. In the cryptocurrency market, Bitcoin has hit all-time highs, rising above $76,000 at one point on Wednesday. The increase over Tuesday and Wednesday was an impressive 14%, but is well within the upward trend established in early September, although we did see a very rapid rise from the lower end of the range to the upper end. Given the latest technical breakout, the working scenario looks like a rise to $100,000 in the 2 to 3 month time frame. A more moderate pattern suggests staying inside the formed range, within which the chances of a pullback to $70,000 are higher in the short term. Next week, financial markets will be influenced by the policy measures that the Trump administration plans to implement. These measures, as well as statements from influential Republicans, could significantly impact the markets, as Republicans have secured a majority in the Senate and are likely to retain a majority in the House of Representatives. The release of UK employment data will be on Tuesday morning. Although wage growth has been slowing for the past year and a half, it is still ahead of inflation and about twice the Bank of England's 2% target. U.S. consumer inflation data is expected to be released on Wednesday. Since March, overall growth has slowed from 3.5% to 2.4%, while core inflation fell from 3.8% to 3.2% in August and rose slightly to 3.3% in September. On Friday morning, the focus will be on October statistics from China, including new home prices, the unemployment rate, industrial production, and retail sales trends. By Friday evening, the focus will shift to U.S. retail sales and industrial production. Sales growth has not kept pace with inflation, but this is of little concern due to the overall upward trend. U.S. industrial production has been stagnant since early last year, falling short of the peak levels of 2015 and 2019. Perhaps with Trump in power, this figure will start to rise, but that could take a year. Stay tuned to Pro News Weekly for more updates on global markets. Like, share, and subscribe.